Hello and welcome to another financial analysis video. Today I'm going to look at Frontier Communications. After my CenturyLink video about their dividend sustainability, a Seeking Alpha reader requested that I take a look at Frontier Communications and how sustainable their dividend is. And as you can see, this stock's really been beaten up over the last few months. It's really just kind of gone flatline along a 52-week low for probably about the last 3 or 4 months. So heading over to the dividend, and definitely when you're seeing 8% dividend yields, some cases nearing 9%, and currently at 8.6%, you do have to ask yourself how sustainable this is. And looking back, we have some what I would consider to be helpful information here, in that Frontier cut its dividend from 19 cents a share to 10 cents a share back in 2011. So what I'm going to do is I'm first going to take a look at the free cash flow approach here. And we're going to look at our trailing 12-month income. And here is our free cash flow. Now, free cash flow is cash flow less capital expenditures. And we're seeing that Frontier's free cash flow is down. It's $473 million on a trailing 12-month basis. I'm going to come over here now and look at our dividend, and I've already highlighted the last 4 dividend payments based on share counts multiplied by the company's declared dividend. And I estimate that in the last 4 quarters, Frontier has paid out $416 million in dividends. So the company does have a little bit of room there for the dividends, but you know, it's a really close call in looking at this. Let's do it a little bit different now. I don't have, well, maybe I do have Q4. Let's see if I can cheat a little here and get Q4 2011's free cash flow. It was $747 million. I want to go back here, and while I don't have the fourth quarter prior to this, I wanted to just get a trailing 12-month average of the old dividend. And these 2 quarters was $382 million. So, I mean, it's safe to say it was a $760 million dividend payment prior to being cut. So you have 760 versus 747. Management cuts dividend. Today, you have $473 in free cash flow and $416 in dividend. I'd say they're above the high water mark right now. Now, this is interesting because unlike CenturyLink, which has a payout ratio of under 100%, Frontier is paying out several times earnings. Now, I'm not going to go into too much detail on this, but this statistic, in my opinion, becomes a little more unreliable, especially if you cut a dividend and it stays over 100%. Some of this is some subsidies that Frontier is getting for providing internet service to rural areas. They have a good relationship with the government, to put it mildly, and so they are able to stay above their payout ratio for a long period of time. But I think we're on to something in terms of pegging the dividend payment here to free cash flow, because that seems to have been the catalyst in the past for management to cut. So in short, my answer is, at this time, Frontier's dividend is sustainable. But watch out when that next earnings report comes out. If the 4-quarter free cash flow falls any more and gets down around that $400 million mark, I'm going to put a caution out on this dividend and its future. I hope you've enjoyed this video, and happy investing.